Hi, welcome to Cryptonomics. Today is December 7th. We will discuss GameStop, their earnings from yesterday, and DocuSign's earnings today, along with AMD, Coinbase, and crypto. To start off, Coinbase reported a miss for the Q3 sales target. They fell short slightly by 9.1% on the year to 1.08 billion. They made a non-GAAP loss of $0 per share. This is improvement from a 31 cents per share loss same quarter last year. Their gross margins improved from 26.1 up from 24.6. GameStop is up 10.24%. And the interesting thing we noted in our previous video is GameStop is still heavily shorted. Now this is from November 15th numbers, so we'll have to wait to see an update on this. Shares short are still 60 million shares. So if we rewind time and look back to what Robinhood did during 2021 and how it impacted GameStop. So Robinhood is an investment app that is tailored towards retail investors. The reason we know this is because their charts don't have any numbers. They're just random lines that tell you nothing. A sophisticated investor would like to know the magnitude, the meaning of the graph, where Robinhood assumes you don't care about that. You don't need to know that information. Here's some derivatives you can invest in. So a bunch of people during the pandemic gathered together and they realized that GameStop was a heavily shorted stock. One of the people that first noticed this is famous investor Michael Burry from The Big Short. GameStop first came on my radar when I noticed he had a position open. At the time, GameStop was trading about $3.50, $4. During the pandemic, a lot of people on Wall Street Bets and Reddit, they noticed this as well and decided to just keep buying GameStop stock. The stock was shorted past 100%. That means there were more shares short than actually existed. So these hedge funds shorted 100% of the shares, then went and borrowed more and shorted those as well, thinking they're going to make a great profit when the company goes bankrupt. Well, these retail investors buying these shares made the prices go up to a point where some of these were getting called back, and these hedge funds had to buy them back at a huge premium. Now, where Robinhood comes in is at one point, Robinhood decided to restrict trading, where users of their platform could only buy and not sell. They could only sell the shares, helping the hedge funds that were short because they needed to cover their position. But if there were no shares out there because they were short past 100% and people didn't want to sell, they just kept buying, they were competing for these shares with the hedge funds, meaning once they had to buy back more than 100% of these shares at a much, much greater price than they sold them at. By many people, this was considered Robinhood's huge mistake because they saw it as them protecting the hedge funds at the expense of retail investors. Robinhood justified this decision as they needed to have regulatory amounts of liquidity on their platform, and that's why they restricted this. Many people have accused Robinhood of market manipulation. Obviously, this impacted the stock because people could only sell and not buy it, and retail investors might have lost substantial amounts of money because they were forced to sell, they could not buy. There were congressional hearings about this. Lawmakers questioned the CEO, and there were multiple lawsuits regarding this. So we also mentioned that retail investors were hurt by Robinhood when they delisted certain cryptos like Solana earlier this year at their bottom prices. So people who bought Solana on Robinhood were forced to sell and they missed out on potentially 300 to 500% gains. I'm not sure if this will hurt Robinhood in the long run because retail investors clearly don't know any better and new ones will come in not being aware of all these things that Robinhood has done wrong. with retail investors. But on to the next story. DocuSign reported earnings today. They beat sales target. The revenue went up by 8.5% to $700.4 million. Profit of 79 cents per share. Improved profit of 50 cents per share same quarter last year. Revenue for Q4 is about the same. Guidance of $698 million. Free cash flow of $240.3 million, up 30.9% from previous quarter. And gross margin was 79.6%, in line with the same quarter last year. The DocuSign CEO said that they had a solid third quarter, delivering a record non-GAAP operating margin and free cash flow. DocuSign is pretty flat on the day. Actually, after hours, down 1%. We think this is maybe a wrong reaction. Might be that the market had better expectations and they were not delivering. Overall, DocuSign looks good. We would consider adding it to our portfolio. We still have some shares that are down quite a bit, but this looks good. On to the next one. AMD up 10% today. I think Lisa Su, the CEO, has delivered some information about their new chip for data centers that is centric towards AIs. And since AI boom is huge and NVIDIA has seen a large increase in their share price because of their servicing the AI industry, AMD is looking to go after the same buy. We have AMD in our portfolio and we're happy with today's bump. Next, Coinbase, pretty flat on the day. Actually up relatively. It opened at 31, closed at 36. After hours, gave back almost everything that it gained, the 1% today. Again, this might be ARK selling because ARK's ETFs have a mandate to keep things under around 10% or under per any one position, and the RKK, their flagship ETF, has Coinbase as the largest position at 10.92%, along with their other ones. And the ARK-F, FinTech Innovation Fund, has Coinbase also as the largest position, almost 13%. Now, they've been trimming this position and adding to Robinhood. Again, Robinhood is not our favorite because of how they wronged retail investors, but they've been on a tear lately, especially in the last week, really, from $8 to almost $12 here, on news of their expansion in UK and rebounding crypto market. Speaking of crypto market, it is at 1.61 trillion. Bitcoin is hovering at 43.2K. Ethereum is up 6% today to 23.5K. And Solana is up 8% to 68. Many other cryptos are up today as well, including meme coins like Dogecoin, Shiba Inu, and others. Now, here is a little lesson in spotting a fake coin if you choose to invest in crypto. One thing to do is to go to CoinMarketCap here and look at, probably you shouldn't go past the first page, that's the first 100. Of course, different risk profiles might lead you to smaller caps. But first, you should educate yourself on how to spot a fake. Now, I mentioned this coin before. It's called Toncoin. For somebody who's been in the space for a long time, like me, not to know what the hell this is first of all, red flag. But you don't have to be as experienced in the space to spot a fake. This is how you do it. You just look at the volume. Now, let's see if we can spot one of these things is not like the other in the top 20. Okay, here's the top 20. We'll cut it off here at Atom. Maybe even at Uniswap. Leo, this is a stable coin, shouldn't really count. So, all of these other cryptos are in hundreds of million if not billions and billions of dollars of volumes per day, 24 hours. What is TON at? 44 million. But apparently it's worth close to 8 billion. This is a huge red flag. This doesn't make sense. This is not a real thing. Nobody knows what this is. So please stay away from whatever this is and use this metric of volume as one of your red flags when choosing to invest in new projects. Not always a deal breaker if it's a smaller crypto, but if it's in a top 20 and it doesn't have nearly the volume of the other ones, that's a red flag. Next up, speaking of crypto, JP Morgan has been fined $39 billion and it has its own crypto coin. But Mr. Jamie Dimon, the CEO of JP Morgan, said to Congress today that crypto, the only true use case is for criminals, drug traffickers, money laundering, tax avoidance. He said this in a hearing in front of the U.S. Senate Committee on Banking. Obviously, with an easy, soft pitch from Elizabeth Warren, they probably rehearsed this. He also said, if I were the government, I'd close it down. Now, many people on Twitter quickly pointed out the hypocrisy of Dimon's statement, highlighting that JP Morgan is the second largest penalized bank, having paid $39.3 billion in fines across 272 violations since 2000. And about $38 billion of these fines were under Dimon's watch, who has been the CEO since 2005. Talk about hypocrisy. John E. Dayton here put it beautifully in his tweet. What hypocrisy. So, when will it end? You know, first they mock you, then they fight you, and then you win. This is them fighting us. Reminder, visit our Substack to read in detailed guides and articles on crypto and stocks. Link in the description below. Thank you for joining us today, and may the force of compound interest be with you.
Peace.